Welcome once again. This is Pinnacle Professional College, and we've been talking about corporate governance and trying to understand the nitty-gritties of corporate governance. If you haven't watched our previous lectures, please do so. Today we'll be talking about governance in public sector organizations and charities and how it works. Right. Public sector organizations, first of all, are organizations that are controlled by the state, and they exist to serve some form of government policy. Very important. So these organizations are controlled by the state, and they exist to fulfill some government policy like healthcare, like education, like defense. Could be any of these areas. The size of the public sector varies in different countries. In some countries, governments might retain control of industries, which the government deems to be of key national interest. Of course, government's view on this might change, leading to the privatization of formerly government-owned entities. This will require evaluation of the entity for sale to the investment community. So basically, what we are talking about here is that the size of the public sector varies in different countries. In some countries, it's high, some countries, it's low. It's very, very important, especially in countries where, different countries believe in different things, right? Some countries believe in privatization, and other countries believe in nationalization. So what's nationalization? Nationalization is where, a country believes in the fact that industries should be taken into government ownership. Government should own a lot of the industries. Privatization, on the other hand, believes that private individuals should own industries. So depending on the concept or the policy of the governments in this regard, that would influence the size of the public sector in the country. Now let's talk about governance in charities. Governance in charities. In many countries, there are a large number of charities and voluntary organizations. Large number of charities and voluntary organizations. These organizations exist for certain benevolent purposes. These are charities, these are NGOs, right? Governments often recognize the benefit that these organizations bring to the citizens of the states by granting them some form of tax privileges and reduce reporting requirements. It's very, very important. Very, very important. However, the organizations will have to demonstrate that they fulfill some sort of recognized benevolent purpose in order to qualify for the more relaxed regulatory regime. This is very, very crucial because charities are seen as serving society, they are seen as solving a particular societal need. It's important to understand that government gives charities certain incentives. It makes sense, right? If you're helping the government to solve societal problems, then the government will give you incentives. And these incentives will take the form of tax privileges, reduced reporting requirements, etc. In Ghana, charities are usually referred to as non-governmental organizations. Stakeholders in the charity will include people who donate funds, donors, and the beneficiaries of the charitable purpose. The main concern for a donor is that funds being provided are used as intended. So if the charity comes and says, we are going to use these funds to solve the problem of street children, they should actually use those funds for that purpose. It's very, very important. Now, let's delve into some more corporate governance issues. Now, we've talked about corporate governance extensively, so you might be able to grasp these issues. So what are the key issues in corporate governance, which establish how well or badly a large company is governed? The main areas covered by the codes of corporate governance are as follows. Number one is the role and responsibilities of the board of directors. Now, this is very key. What are the roles and responsibilities of the board? What are the roles and responsibilities of the board of directors? We need to understand that. What are the roles and responsibilities of the board of directors? What are the roles and responsibilities of the board of directors? The board should have a clear understanding of its responsibilities in order to even be able to fulfill them. So good governance will establish what the responsibilities of the board are and make sure they are carried out properly. Number two, what is the composition and the balance of the board of directors? What is the composition and the balance of the board of directors? A board of directors collectively and individual directors should act with integrity and bring independence of thought and judgment to their role. One of the key things when it comes to a board is that the board should not be dominated by a powerful chief executive or a chairman. Otherwise, it undermines independence of thought. So the board should not be dominated by a powerful person or a powerful executive. It will undermine independence of thought and it will not embrace diversity of thought. It is therefore important that the board should have a suitable balance and consist of individuals with a range of backgrounds and experiences. So you see the boards that do really well, they have people from different backgrounds to be able to bring perspective to conversation. Number three, financial reporting, narrative reporting, and auditing. The board should be properly accountable to its shareholders and should be open and transparent with investors generally. To make a board properly accountable, there has to be high standards of financial reporting. And number two, external auditing. So how do you keep a board accountable? Number one, annual reports or financial reporting. Number two, external auditing. These things keep a board accountable. Please remember this. These two things keep a board accountable. It's very, very important. Very, very important. Now let's move on to directors' remuneration. Directors, obviously, they do not work for free, they work for a reward. To encourage their commitment to achieving the objectives of their company, directors should be given suitable incentives. So by linking their remuneration to their performance, it helps incentivize them and is usually considered essential for corporate governance. Number five, I think, risk management and internal control. We cannot talk about corporate governance without talking about risk management and internal control, right? The director should ensure that the company operates within acceptable levels of risk, and there are internal control measures that have been put in place to ensure that the resources of the company are properly used and the assets are protected. The assets are protected because this is very, very important. A company that has bad internal control measures, there will be a lot of leakages and risk will not be managed properly. Number six, I think, shareholders' rights. Shareholder rights vary between countries. These rights might be weak or might not be exercised fully. Another aspect of corporate governance is encouraging the involvement of shareholders in the companies in which they invest. And how do you encourage involvement? Through dialogue. Through dialogue. Dialogue with the directors, as well as using the voting powers of the shareholders at general meetings of the company. The shareholders will have voting powers, and to involve them, shareholders must use these voting powers to their benefit. Disclosure. Disclosure is basically keeping stakeholders and shareholders informed about the company. Keeping shareholders informed about the company through disclosures that go beyond the publication of audited financial statements, right? One of the means of communicating to shareholders is through the audited financial statements. But when we talk about disclosures go beyond that, because there has to be an ongoing ongoing communication between the directors and the shareholders. It has to be ongoing, and that's where disclosures come in. It's basically keeping shareholders and stakeholders informed about the company, And this is very, very important. So that shareholders know exactly what's happening to their investments. So this is where we would bring this conversation today. Today, we talked about some key things covered by the code, the role and responsibilities of board of directors, the composition of the board, financial reporting, remuneration, etc. If you haven't subscribed to this channel, please do so. Share this video with a friend and have a good day. Thank you. Bye-bye.